You've just nailed 3 winning trades in a row. You feel unstoppable, like you finally cracked the code to the markets. But here's the trap. That euphoria can be more dangerous than losing. Because when confidence turns into overconfidence, a hot streak can quickly turn into a meltdown. Let's talk about why winning too much too fast often leads to blowups. If you've ever traded for more than a week, you know the sting of losses. But what if I told you that winning, yes, winning, can be just as dangerous? Not the occasional green day, but a string of wins that makes you feel like you've leveled up in the market. You start thinking, maybe I'm better than I thought. Maybe I am the next Warren Buffett, but with faster thumbs. This mindset is where euphoria sneaks in. Euphoria is that intoxicating high you get when trades keep going your way. Suddenly, the market feels like it's speaking your language. Your analysis looks genius, your entries feel smooth, and your account balance is smiling back at you. But here's the danger. When traders get euphoric, they also tend to overtrade. They start taking trades that don't meet their plan, sizing up too aggressively, or chasing setups that aren't really there. The same emotions that fueled their winning streak now fuel their downfall. In this episode of KnowMarkets Trading Psychology Pitfalls, we're digging into why euphoria is such a silent killer in trading. We'll explore what happens in your brain during a winning streak, how overtrading creeps in, and why so many traders give back their gains just when things were going well. We'll also talk through real-world examples, like what happens when people pile into Apple or Tesla after big runs. And most importantly, we'll break down the steps you can take to recognize and stop this destructive cycle. Because the truth is, the market rewards discipline, not dopamine. Before we continue, I want to thank the sponsor of today's video, Noesis. Noesis is a platform built specifically for traders who want to level up their consistency and mindset while avoiding mental pitfalls. It gives you tools like a daily mental check-in, a trade journal, and an emotion wheel to track your state while trading. On top of that, it includes structured playbooks, which are strategy checklists that you can go through before and after each trade, plus a playbook marketplace where you can explore proven strategies from other traders or share your own. If you're serious about developing the psychological edge that most traders ignore, Noesis is worth checking out. You can get started today at noesis.zone. Link in the description. Let's get into it. The euphoria trap. Why winning feels so dangerous. Let's start with the obvious. Winning feels good. When you hit back-to-back successful trades, your brain releases dopamine. It's the same chemical rush gamblers get at a casino. In fact, studies show the brain reacts more strongly to intermittent wins than to consistent ones. That's why traders can get hooked. Imagine this. You've been trading Apple stock. You bought the dip at $150, it ran up to $165, and you sold for a tidy profit. Next day, you catch another bounce. Boom. You're up again. By the third win, you're feeling like you've unlocked a secret Apple insider hotline. Every move feels obvious. This is where the trap sets in. That euphoric high doesn't just make you happy, it distorts your judgment. Risk feels smaller than it is. Discipline feels optional. And soon, you're taking trades just to keep the winning streak alive, not because the setup makes sense. The problem isn't the winning itself. It's what your brain does with it. Euphoria turns trading into a game of how much more can I get, instead of how do I protect what I've built, and that's a dangerous shift. Overtrading, the silent account killer. So how does euphoria turn into overtrading? Simple. You start believing the rules no longer apply to you. Think about this scenario. Tesla announces record deliveries. The stock pops 8% in a day. You caught the move early, you're sitting on profits, and you feel like a genius. Instead of banking the win and stepping aside, you double down, buying more shares after the big move. Tesla only goes up, you think. Then, a day later, profit takers flood in. The stock pulls back. That one extra trade wipes out 2 days of wins. That's overtrading in a nutshell. Doing too much, too fast, without enough reason. It shows up as taking more trades than your plan allows, increasing your position size impulsively, chasing after every small price move, trading out of boredom or overconfidence. Overtrading is so dangerous because it sneaks in under the disguise of productivity. You feel like you're working harder. You're at the screen all day, making moves, staying active. But in reality, you're burning emotional energy and handing back profits. Why winning streaks end in blowups? Here's the paradox. Winning streaks often end in blowups not because the market changes, but because you do. When you're losing, you're cautious. You respect your stop losses. You hesitate before pulling the trigger. But when you're winning, caution gets replaced by overconfidence. You ignore risk. You convince yourself you're in the zone. And you start pressing trades that have no edge. One famous example, during the 2021 meme stock frenzy, traders who nailed early wins on GameStop or AMC often doubled or tripled down. Instead of locking in life-changing gains, many rode the wave all the way back down. Their winning streak ended not because the stock turned evil, but because euphoria blinded them to risk management. The lesson? The market doesn't punish winning streaks. Traders punish themselves by thinking the streak will last forever. Spotting the signs of euphoria before it's too late. So how do you know you're in dangerous territory? Look for these red flags. FOMO impulses. You feel anxious if you're not in a trade. Rule breaking. You ignore your trading plan because you just know this trade will work. Overconfidence bias. You stop analyzing setups deeply because your gut is hot right now. Escalating size. You suddenly trade larger than your usual risk tolerance. If you catch yourself checking all 4 boxes, congratulations. You're in euphoria mode, and it's only a matter of time before overtrading follows. Breaking the cycle. Practical fixes. Now let's talk solutions. How do you enjoy a winning streak without letting it ruin you? Set daily or weekly profit caps. Decide in advance how much you're willing to make before walking away. Hit your target? Close the laptop. Celebrate. Protect your wins. Journal your mindset, not just your trades. Write down how you feel after each win. If you notice words like unstoppable or easy, that's a red flag. Use a cooldown rule. After 3 winning trades in a row, force yourself to take a break. Step away for an hour, even a day. Give the dopamine time to settle. Stick to position sizing rules. No matter how good it looks, don't suddenly double or triple your normal size. Keep risk per trade consistent. Focus on process, not outcomes. Your job isn't to rack up endless wins, it's to execute your plan. Remind yourself, the market will always be here tomorrow. Remember, trading is about surviving long enough to compound your edge. Protecting profits is harder than chasing them, but it's what separates amateurs from pros. KnowMarkets, the sponsor of the video, is a great journaling tool to help you get better at controlling your mindset. Remember to check the link in the description. Here's the big takeaway. Euphoria feels amazing, but it's just as dangerous as fear. Winning streaks don't fail because of the market. They fail because traders let emotion replace discipline. Overtrading isn't about working harder, it's about working sloppier. If you want longevity in trading, learn to treat a win the same way you treat a loss, with calm, consistency, and respect for your plan. The market rewards discipline, not dopamine highs. Next time you catch a streak, enjoy it, but don't let it blind you. Protect your gains like they're gold, because in this game, they are. Thanks for watching this episode of KnowMarkets, Trading Psychology Pitfalls. If you've ever felt the euphoria of a hot streak and the pain of giving it all back, drop a comment below. Share your story. You might help another trader avoid the same trap. Don't forget to like this video if it hit home. Subscribe if you want more trading psychology deep dives, and hit that bell so you don't miss what's next. In our next episode, we're tackling the opposite side of the coin: fear, hesitation, and how missing trades can be just as costly as overtrading. Until then, trade smart, stay grounded, and remember, the market is a marathon, not a sprint. Euphoria is temporary. Discipline lasts forever.